Good morning everyone and welcome back to Morning Markets here at True Potential. It's Thursday the 22nd of February. Today we're going to discuss portfolio diversification, but particularly with regards to the strength in equity markets. So what we're seeing right now is ongoing strength in equity markets. Recent weakness has been undone by the surprise in earnings from Nvidia, but what we're capturing here is continued upside surprises in growth, and bond markets in particular are feeling that. Recall that at the start of the year we began with a large number of interest rate cuts expected for this year, and we're continuing to see those being priced out. That is, markets are moderating their expectations for interest rate cuts ahead. It's particularly surprising here in the UK. Recall that the GDP impulse here is around zero. Inflation is expected to decline substantially into the middle of the year and possibly dip below 2%. And of particular notice is that wage growth here is continuing to decline substantially. Now, it's not coming through in the annualised yearly numbers, but the trend or momentum indicates that wage growth here will decline substantially, possibly below 4% into the spring. Recall that last summer it was above 7%. And that's far more fitting with a 2% inflation target, yet markets have continued to price out interest rate cut expectations here, such that there's only 100% probability in market pricing of around 0.5 percentage points in interest rate cuts ahead. And minutes from the Federal Reserve in the US confirm a similar picture with regards to upside surprises and growth on markets pricing out interest rate cuts. The US began the year expecting 6 interest rate cuts. We had got to only 4 in expectations last night, and after the minutes from the Federal Reserve, there is only a 50-50 probability of that 4th cut happening by the end of the year. So markets are less sure on there being 100 basis points of cuts for this year, and that's because growth remains so strong, particularly in employment markets. So bonds have continued to reprice, and the yield curve remains particularly inverted, showing that monetary policy remains very tight. The equity markets have looked through that and are being driven in particular by continued surprises in tech. And nowhere does that matter more than the US with the overnight earnings updates from Nvidia. Nvidia have reported a 265% increase in earnings over the year, and it took fourth quarter earnings to above $22 billion, way beyond market expectations. Nvidia continues to surprise markets not just with its sales and with its earning numbers, but also with its guidance. And it's continuing to decrease the time at which it meets customer orders. So markets are bringing forward expectations for future earnings from Nvidia. And this has pushed recently stock markets in the US to all-time highs. Overnight, we've seen a new all-time high in Nikkei in Japan. And we're also seeing all-time highs continuing in German and French indices, which continues to push the Euro Stoxx 600 higher. So it's a good story for equity markets. It shows it's prudent to remain robust on expectations for growth and to be fully invested. Thank you.